Hi, I'm Angie. I spent the last 6 years building up my credit and my savings, so let's have a chat. I used to get confused about when to use my credit card versus my debit card, so let's break it down together. With a credit card, when you shop, you can earn cashback dollars and points for spending the bank's money and not your own. But since this isn't your money, you would have to pay the bank back each month on time and in full to avoid paying any interest. Interest is the fee you pay for borrowing the bank's money because nothing is really free in this world, and you will be charged for interest if you don't pay off your credit card balance every month on time and in full. Right now, the average APR on a credit card is over 20%. Not paying off your credit card is one way many people end up in years and years of debt. Assuming you pay off your credit card statements on time every month and in full, you'll be able to build a great credit score for when you want to buy a house or car in the future. But wait, how does paying off my credit card statements and my bills on time help me buy a house or car in the future? I don't see how those two things are related at all. This is where your credit score comes in handy. Your credit score is a snapshot of what lines of credit you've opened and how you've paid them back. Your spending habits are tracked throughout years of your life, and your credit score changes and stays up to date with your spending habits. When you're ready to buy yourself a larger ticket item such as a house or your first car, if you have a high credit score, when you take out a large loan, the banks will be willing to lend you more money with a lower interest rate because they know you have a history of paying back loans on time. On the other hand, if you want to buy that same house or car but you have a much lower credit score, there isn't evidence of your good borrowing history, so the banks are more likely to not loan you the money that you need. Besides building up your credit score, spending money with your credit card unlocks other benefits, such as racking up cashback dollars for each dollar spent, helping you accumulate travel points for when you want to book your next flight. And this is a big one. Unlike debit cards, which we'll talk about later, credit cards offer fraud protection. Under federal law, credit cards often offer a lot more liability protection if you are a victim of fraud. I will use my credit card for any everyday purchases that I need to pay for, such as bills, groceries, dining, and any financial emergency bills that I know I will be able to pay off fast. I would not use my credit card to withdraw cash. This is because when you withdraw cash with a credit card, you are taking out money that you don't have, otherwise known as a cash advance, and you will immediately be charged interest. The second thing I wouldn't use my credit card for is that I won't treat my credit card as my emergency fund and let my bills stack up. Third thing is that I would not use my credit card to pay for things that I otherwise cannot pay for in full with cash today. The key thing for credit cards is that even though you're spending the bank's money when you're using your credit card, you need to treat it like your cash and only spend what you can afford to pay off right away, and don't buy what you can't afford today. Okay, now let's talk about debit cards. Think about it like cash in your wallet, but in a plastic card form. Unlike credit cards, debit cards withdraw money from your bank account. Because this is a card that is directly linked to your checking account, you don't have to pay any interest when you're using this card because you are not using anyone else's money except your own. When you pay for things with your debit card, you are spending your own money with no risk of going to debt, but you also get no benefits. So no, you're not getting cashback dollars for each dollar spent, and no, most banks don't offer fraud protection for debit cards. Because it's your money that went missing, banks often are less inclined to investigate and get it back for you. To recap, when you're using your debit card, you are simply spending the money in your piggy bank. If you're someone who wants to keep your spending under control and not risk going into debt, debit cards are great for that because the only way to go into debt with a debit card is to overdraft your account, aka going to the negative balance on your checking account. And a great way to avoid that is to opt out of that overdraft protection on your account to not have that risk. Because of how the two cards are designed, it is much easier to overspend with credit cards than with debit cards. Unlike a credit card that can come with an annual fee, debit cards typically don't come with many fees. Some banks even offer to waive any monthly account fees for you if you're using the debit card regularly. One thing to note is that debit cards often do not have very good fraud protection when it comes to scams. Since it is directly linked to your own money, banks may not offer fraud protection on certain debit cards as there's less incentive to help you get your money back when you fall victim to a scam. While it's a great way for you to ensure you stay within your budget, play it safe, and don't have to worry about going to debt, spending money with your debit card won't help you build up your credit score because you are using your own money. So using your debit card alone won't help you establish or build up your credit history for that big purchase later on down the line. I will use my debit card to withdraw money, send a money order, or write checks. I would not use my debit card for everyday purchases such as bills, groceries, and dining, or online purchases because since there's so many scams out there, I would rather pay for my online purchase with a credit card with protection. So in case if I ever fell into a scam, I would make sure that the banks will be able to get that money back for me. Okay, in summary, choosing to use a credit card or a debit card when you make a purchase depends on what your personal goals and financial goals are. My personal goal right now is to build on my credit score as much as I can within the next 5 years, so when the time comes, I am able to have that choice of making that big purchase of my first home in the future. In summary, credit cards are great when you want to build credit history, make large purchases, shop online, want rewards or fraud protection, or you just need a short-term loan that you know you'll be able to pay back within 1 month. On the other hand, debit cards are great when you want to avoid debt, when you want to fix your overspending habit, when you want to withdraw cash from the ATM, and it's also great when you need to send a money order or write a bank draft. I'm curious to know which of the two cards, credit card or debit card, do you use most on a day-to-day basis? Let me know in the comments.